Good morning, or I should say good afternoon. This is Harold Parsons, and I wanted to welcome everybody to their religious webinar. Thank you for standing by and taking the time to join us for today's webcast on internal controls for religious organizations. My name is Harold Parsons. I'm the principal in charge of our religious practice at CliftonLarsonAllen. And just a couple housekeeping items to start off with. If you experience any technical difficulties, please dial 1-800-263-6317. That's 1-800-263-6317. If you have any questions on today's content, we've planned a Q&A session at the end. So you can write your question into the box on the, I think it's on the lower right-hand side of your screen, and hopefully we can answer those at the end of the session. If you haven't already downloaded the presentation slides, another copy of the slides as well as the webinar recording will be emailed to you within the next 10 business days. And finally, we do send out a questionnaire, and your feedback is very, very valuable to us. So we do want to hear what you think about the webinar. And in particular, we'd also like your feedback on future topics. We do rely on that to bring you content that you want to hear. So please provide us feedback. For those of you who are not familiar with CliftonLarsonAllen, we're a professional services firm with three distinct business lines, including accounting, consulting, outsourcing, and wealth advisory. We've got more than 50 years of experience in the nonprofit sector. We have one of the largest nonprofit practices in the country. In addition to serving religious organizations, we serve a wide variety of nonprofit clients, including associations, membership organizations, foundations, higher education institutions, social service organizations. We serve well over 6,000 nonprofits across the country, and we're one of the top 10 CPA firms in the nation. I would like to introduce today's presenter. Tim Murphy is a principal in our Indianapolis office, and Jeff Roberts is a director in our Denver, Colorado office. Before I turn it over to our presenters, I will go over today's learning objectives. At the end of the webinar, you'll be able to understand the risks associated with a weak internal control environment. You should be able to apply tools and best practices to enhance your internal controls and better safeguard your organization's assets, personnel, and membership. With that information covered, Tim, I'll pass the mic over to you to get started.
Well, good afternoon. This is Tim from Indianapolis, and what I would like to do here in the first section is talk about recent developments. When we prepared this presentation and decided that we were going to talk about internal controls, we weren't aware that the Washington Post was in the process of doing a nice expose on fraud in nonprofits. Many of you that are on the line are from churches, so churches are houses of worship, so it may not necessarily apply from the perspective of some of the 990 information that we discuss here, but it's very relevant because the Washington Post expose kind of talked a lot about the types of fraud that are occurring in nonprofit organizations. So the Washington Post report came out on October 26th, and basically they did significant data mining of Form 990s, which are publicly available, and specifically they looked at question 5 of Part 6 on the 990 about diversion of assets. According to their research, more than 1,000 nonprofits checked the box. Unfortunately, many of them did not disclose on Schedule O additional information about the diversion of assets. As a result, they've done some research that basically says that the 10 largest disclosures combine for potentially over $500 million of assets being diverted from charitable exempt purposes. 50% of those did not reveal the total amount of the loss, and so there's a kind of a scary number out there as far as the total amount that has been lost through diversion from those organizations who have to file a Form 990. There is a searchable database that's available online. Don't necessarily, hopefully no one that's on this call is listed in there, but it might be an interesting read to research and find out organizations in your area that might be subject to a diversion of assets. There were multiple religious organizations listed, which I think is what brings this topic, makes this topic relevant to this group. As a result of the research from the Washington Post, there have been multiple investigations launched. That includes investigations from 7 states and Washington, D.C., and then I think it's also causing there to be some consternation in Congress about whether or not nonprofits are appropriately regulated. For those churches or organizations that are exempt from 990 filing requirements, I think this will also come into play down the road as there have been calls for churches to be no longer exempt from filing the 990. There's been talk of that for the last several years. It'll be interesting to see if this gets any legs to it from a regulatory standpoint, because the last thing we want is for Congress or the U.S. government to regulate the actions of our houses of worship. CliftonLarsonAllen's National Director of Public Sector Services wrote a letter in response to this research from the Washington Post, and he specifically cited research from the Center for Fraud Examiners research that says that there is no greater likelihood of fraud existing in the nonprofit sector than in the for-profit. So the likelihood of fraud existing is going to happen whether you're in a for-profit entity or a nonprofit entity. However, we are as nonprofit organizations, we're in a catch-22 because the expectation, this is public money, donors received tax exemption, a tax contribution, and we want to perhaps be above reproach. We definitely want to be above reproach, and so there's a higher scrutiny expected for nonprofit organizations in this. So some other recent developments, and this comes from the Global Mission Report published by Gordon Conwell Seminary, basically that they estimate that there's $37 billion in church-related fraud in 2013. That's an amazing number. That's more than the estimated amount churches intend to spend on worldwide missions. And unfortunately, approximately 80% of all cases of church fraud go unreported. I know just last night I was reading an article on the internet of a local church here in Indianapolis, a relatively small church, I believe reported $177,000 in fraud. It's unusual that you read about it. This particular individual that perpetrated the fraud actually has been arrested and is in jail, which is an extremely unusual thing. Oftentimes, churches take the approach of somewhat forgive and forget, and that leaves the perpetrators to go work at another church and steal from that church as well, or other nonprofits. This example is of a fraud that was identified. This information comes from Church Finance Today, which is a publication from Christianity Today. The primary editor is Richard Hammer, and it was a great article that talked about the lack of controls at a particular church allowed for the CFO to steal over $850,000. He had complete control of the bank's checking accounts, credit cards, and blank check stock. Probably the most concerning was that he had access to digital signatures of all the church officers. And so he was able to execute transactions that no one else knew about. He was able to pay for his mortgage, personal credit card charges, and of course he had some nice luxury purchases, as well as he was able to go to nice sporting events paid for with church funds. Essentially what the church, what we found out is that very simple internal controls could have prevented this $850,000 fraud from happening, or if not preventing, would have made it more difficult. There were no requirements for 2 signatures on all checks above some sort of a nominal amount. We have clients that require 2 signatures on all checks. We have other clients that have a sliding scale, 1,000, 5,000, 10,000, depending on their size. One other key control that could have easily helped identify this was that the bank statements could have gone to the treasurer's house or by some other independent church official that was not on the payroll for the church. So there were a number of issues there that just were glaring examples of some simple controls could have reduced the likelihood of this fraud. As it turns out, he got the church into debt. He was able to take out a line of credit with the bank that no one knew about, basically kept off the balance sheet, of course, and through that line of credit, from what I recall, he was able to get the church into debt and cover up his habits. So why should we really care about internal controls? Not only do the lack of internal controls make us more vulnerable to fraud, it can lead to, obviously, incorrectly reported financial information, whether that be omissions, errors, or misstatements. Internal controls will obviously help the organization run more efficiently and effectively because things are documented and you have processes. You're perhaps not completely dependent upon one person to do everything. And then overall, it helps control risk and manage risk for the organization. Waiting on things to progress here. So we are often more susceptible to fraud. That may contradict what I said a few minutes ago. I think the primary reason for this is just the level of professionalism or the level of staffing sometimes in nonprofits is less so than in our for-profit counterparts. We have limited resources. We typically have oversight by volunteers. It's not clearly their full-time day job to provide oversight over the financial operations either of a nonprofit or of a church. We have volunteers, and yes, they do commit fraud, who have access to confidential information and could misuse that. We also have boards with little or no financial oversight experience. So the strong board is a board that obviously oversees the ministry and also has some good financial experts on the board to be able to guide and direct the internal controls and the control environment for the organization. Unfortunately, those who can least afford it, some of the smaller organizations, end up suffering sometimes the most. I am going to pass the presentation over back to Harold, I believe. So Harold, take it away.
All right. Well, thank you very much. What's presented here is a fraud triangle. So we normally think of fraud, and the person that commits fraud has 3 things that are usually necessary. Rationalization, that can take the form of, I deserve it, I need it, I'm underpaid, they'll never miss it, but somehow in their mind they can rationalize committing fraud. Motivation. They're usually motivated to commit fraud. The most common is gambling. Gambling is a great motivator for fraud. And the other big motivator is lifestyle choices. They got the big boat, they got the big house, they got, you name it. And you can walk around a parking lot at a church, and that there's some envy involved in a lot of cases, but that's the motivation. Now, the opportunity is also necessary. They actually have to have an opportunity to commit fraud. And that's really, I think of it as a low perceived risk of detection. They have to, in their mind, think that there's going to be a relatively low chance of getting caught. And out of all those three, you can be aware of rationalization. You can look for that. You can look for motivation, but really the only thing that you can control to any point is you're going to look to the opportunity and reduce that opportunity for theft. And those are controls. Those are the controls. So we're going to look at a couple of types of fraud that can occur. And I think that's the important thing here, too, when we think about this, is that when you think, you need to be able to picture in your mind or understand how a fraud can occur. A very typical example is, if you got someone that takes home all the cash from the church, counts it, and just brings back and they have control over the donor database, et cetera. You can picture in your mind how someone could steal money in that situation. That's a very easy example. You can certainly picture how the individual that Tim had in his example, how they could steal money. But you have to be able to understand how that theft could occur before you can prevent it from occurring. Collusion is a very common form of fraud. It's when two or more individuals get together and they can basically they can commit fraud together. This is why we normally would recommend that husbands and wives don't serve on the same count team unless you got a lot of other people together. If you think that they can prevent each other's fraud, I think you're mistaken in that. We usually look on a husband and wife as one person. So lapping is another example of fraud where you have an individual that steals the money, but they use the next receipts to pay that back. You have a longer and longer and a higher and higher amount of the delay between, for that to catch up. That individual who is doing the lapping can't take vacations normally, because then in a lot of cases that scheme normally falls apart when that occurs. Accounts payable fraud is very common. An employee can falsify payments to real and imaginary vendors to which checks are sent. They can duplicate payments to an invoice. And you think, well, you can't really put two invoice numbers into your system. Well, all they have to do is change that invoice just a little bit. B instead of an 8. They can have a space in there. They can put a dash before it. That you can get you can get the same invoice number into your system if you really think about it. So that's a very, very common method of fraud. Payroll ghosts and unauthorized pay changes. We've seen this a number of times. One of the most common methods is to simply leave someone on the payroll for an extra pay period or an extra couple pay periods after they leave, and divert their pay to you. And a question was asked, I think, in a recent training we had, is how many people really think that providing employees with a W-2 is a good fraud detection methodology? Do employees really know how much money should be on their W-2? And I hate to say it, but it's not a very good. You really can't rely on that to detect fraud. So people don't necessarily know how much money they should be paid. So the purposes of internal controls is first off to safeguard your assets. It's simple stewardship. Stewardship of the assets entrusted to you. So you want to make sure that those assets are safe. To produce accurate accounting data so that you can make good decisions. You can rely on that accounting data to make those decisions. To contribute to efficient operations. to promote compliance. So you have board policies, you have donor restrictions. You also might have bond restrictions or debt covenants with the bank that you have to comply with, and without good accounting data, you could easily be out of compliance and not know about it. So bonus to this is an employee working under a good system of internal controls is more easily protected from suspicion of any shortages. I also think that the bonus is that individuals are weak. We are all weak human beings. We are prone to theft and sin, and good internal controls prevent good people from being unnecessarily tempted. And so if you've got, it's the old idea I remember as a kid that there was a campaign to have people take their keys out of their car and lock their car and not just leave the keys in the car and think. It's really simple, but it just prevents kids from stealing cars. It is no different with good internal controls in an organization. You prevent good people from succumbing to their own weaknesses. Controls. COSO is just a methodology that's pretty standardized in how organizations look at internal controls. The controls can be divided into two types of controls. One is to prevent the theft or prevent errors also, and the other is detective. So if you think about the earlier example of the individual who got their church into debt and stole $850,000, a detective control would be, for example, the bank statement is sent to the treasurer, or the treasurer might have online access to look at the bank at the bank statement. That detects a fraud or error after the fact. Not allowing them to have the signatures, that would be a preventative control. It prevents it. Preventative controls are great, but they're usually not perfect, and you need both preventative and detective controls when you look at an organization's control structure. Provide reasonable assurance. It's not absolute. So no controls are going to be absolute. You want good internal controls. They will never be perfect. It's a process, so controls are a process that takes place every day. The purpose of having internal controls is not so you have good internal controls. It's so you can prevent and detect fraud and errors. So, benefits of strengthening internal controls. Again, it's safeguarding your organization's assets. You protect organization's personnel, and you protect good, honest people from doing the wrong thing. You also protect them from suspicion of doing the wrong thing. And you can go through these as good benefits, but I can assure you that fraud in a church is absolutely devastating. It is beyond the dollar amounts involved. The church or any religious organization that has fraud not only risks the money that they have lost, but they also risk the fact that the people involved in that house of worship in the church and will basically give up, not only change churches, but they will leave the church in total, and they will leave the faith. So when I think about benefits of internal control, I think that's one of the strongest benefits of internal control, that you are entrusted with individuals' assets, and people put their faith in your church. So that's a very good benefit of having good internal controls. The risks are very high. With that, I'm going to turn it over to Jeff.
All right.
You got it. Take the course.
Thank you, Harold. And as we talked about this in planning for today's session, we really wanted to take this out of the theoretical and try to give you all some practical guidance. And I'm hoping we've got a lot of content on the next several slides, of which there's no way we could talk about all of it. But the hope is that there's some useful tools that you'll have there to refer back to as you're looking at strengthening controls in your own organization. But as Harold mentioned, COSO has given us sort of the roadmap for the best way to think through and develop controls within our organization. And so it is important, I feel, to follow that roadmap as closely as possible, because those people have spent their careers developing the guidelines for that. And so the roadmap really looks like 5 different steps, and that is first to look at the control environment, often referred to as the tone at the top, is kind of the foundation. And then we're going to take a look at actually how do you assess risk within your organization. You go through the step of after you've assessed the risk, you take the time to document the specific controls that you have. You then move on to making sure that those things are appropriately communicated and that there's everybody understands within the organization how information is going to flow. And finally, there's a feedback mechanism that is through monitoring. So we're going to talk about each one of those in some detail. So as it relates to your control environment, I think the important thing to communicate here is that the COSO guidance really refers to the control environment as the tool or the mechanism by which you can literally raise the internal control consciousness of your people. And so that's really the goal, is you want your whole staff at some level to be aware of the importance of internal controls. And what they've found consistently is that it has to start at the top. And if it's not at the top and communicated down, it's probably never going to be a very strong priority in your organization. So a couple of tips on how to improve that tone in your organization. One of the first things we always recommend is that you develop a code of conduct or a standard of conduct, and you publish that and have every person in your organization sign that they agree that. I recommend that you even do that, have them do that on an annual basis, so that everybody kind of puts eyeballs on what does it mean to act ethically in our organization. And I know as religious organizations, we all have probably some form of that, but maybe taking it to the next level of making sure that it's reviewed annually and signed off on annually. Maybe just revisiting that policy and making sure, does it really say everything that we want it to say? Maybe not just about moral conduct, because we typically see that with religious organizations, but what about other types of ethical conduct that our staff may be confronted with, and how do we want them to address that? The other thing on this slide I would just highlight is that we really like to push organizations that have a board to look at adding a finance committee or an audit committee as a subcommittee of the board, because typically what happens in the subcommittee is they can go down deeper and really take the time to focus on the auditor's recommendations and hear about the progress that's been made related to internal controls. So we highly recommend that. I know a lot of small boards may be struggling with how could I do that. If anybody has any questions on that, I think we could easily provide just some best practices or maybe even some guidance on how to get that started in your organization. Just let us know if that's of interest to you. Then we move on. After we've addressed the environment, we move on to the risk assessment. And I know this seems a little bit ambiguous, but it's really taking the time to prioritize the risks within our organizations. And so we have here just a very simple 2x2 matrix where we have the frequency or the possibility of occurrence on the sort of the x-axis and the impact to your organization on the y-axis. And so you take every item that you could think of and you ask yourself, where does this fit on the risk matrix? So if we're looking at perhaps a diversion of cash from the weekly offering and asking, how could it happen? The possibility of occurrence, that might be high depending on just because of the volume of cash that's going through your organization. But also you typically think, well, that could also have a huge impact. So we probably prioritize that risk and say, we're going to make sure that we focus our efforts on addressing that risk. Whereas we might bring up a risk like that prepaid expenses might be misstated in your financial statements, which I suppose is a risk, but the possibility and the impact might be fairly low. And so we would say, let's not spend a lot of time on that. Let's prioritize these risks and make sure we've addressed the high priority risks first. As you think about the threats in your organization, this, I think, can be a good checklist to use of things to think about. I know for me, sometimes it's just needing somebody to sort of jog my thinking on a particular topic. And I think this list can be used for that. I'd say the most important one that I'd call your attention to is the first one, is just to force your team to ask the question, how could this happen in our organization? Because for sure nobody thinks it can happen until it does. And so by forcing yourself to ask, how could it happen in my organization? This is just a really good question to think through, and I encourage you to maybe get together with a team of people or a group of people to spend some time, maybe on an annual basis, of, hey, let's just get together, let's look at this, let's ask some questions about that. Obviously, there's other risks besides fraud. There's misuse of assets. There's a possibility of a damage to reputation. I think Harold did a really good job of talking about that when there is fraud, the impact on your reputation. There's obviously legal issues that could arise, and programmatic failure. And then we move on to our control activities. And this is the fun one, because we're going to challenge you to ask, and not only ask the question, but take the step of actually documenting your controls. And I don't think there's probably anything on this slide that's new to anyone here. We refer frequently to segregation of duties and that kind of thing. But I think the real challenge is, if you haven't taken the step of writing down and kind of forcing yourself to go through each significant process and document it. We did this recently on an engagement for a church that we serve, and they engaged us to help them with the documentation process. And at first glance, when they described the process to us, it sounded really thorough. But when you actually take the disciplined step of writing everything down, it sort of allows you to see where there may be holes or where maybe a control isn't properly designed. And it's just an excellent exercise to do that step. And it's hard because we're all leading very busy lives, but it's a very, very important step that we would challenge you to take on. And even if you took it on in little bits, like I can do cash receipts in this month, and maybe next month I'll focus on documenting another process. Just anything you can do on that is very, very helpful to assessing the overall control, the control structure that you have. Once we have everything documented, it's very important that we also look at how information is being communicated within our organization. You want to make sure that those financials are going to the right place. We've seen situations where perhaps financial information is held by a particular person on the staff and not really revealed upwards, maybe to the board, and that's very damaging. It can really hinder the total process of transparency that you're really looking and striving for within your organization. And so, some best practices on this, I think it's always helpful if you can collaborate or be a part of other organizations that might be talking about risk. Obviously, the ECFA, Evangelical Council on Financial Accountability, has a lot of resources out, does a lot of events, and those are good resources to just become more aware of things that are affecting religious organizations. But I'd also like to just mention, too, the idea that your people need to know how to communicate if they suspect any kind of fraud or illegal act. And we've seen where a lot of people jumped on the bandwagon, a lot of boards jumped on the bandwagon and created a whistleblower policy, but didn't really thoroughly communicate it to their staff. So they made the policy and said, great, we got that taken care of. But when you ask the staff, they're kind of scratching their heads. So we always recommend as a best practice, if you have that whistleblower policy, go ahead and send that out on an annual basis to your staff so they're aware. This is what you do. We're going to be very upfront on this, and this is what you do if you suspect something. It's very helpful to have that in place. Then we move on to what does monitoring actually look like in your organization? And the analogy I use here is sort of like if we do all this hard work on our internal controls and we don't do the monitoring, it's a little bit like getting the football to the 1 yard line and not getting it into the end zone, because we can do all this work, but we need to have a feedback mechanism to tell us if what we've done is actually working. So a couple of quick examples on monitoring. Using your budget to actual variances and following up on those on a timely basis really quickly is a way of monitoring within your organization. I also recommend that your controller or your accountant develop a monthly closing checklist, something that they can use to actually document all the steps that they do before they produce the financial statements. And then that document itself can easily be reviewed by an independent party, whether that be a board member, an outside accountant, or something, a volunteer that's qualified, could come in and actually do a quick review of that and verify that those things that are supposed to be happening are actually happening. And as we're monitoring, I think it's important to talk briefly about control design, because if you have a control but it's not designed properly, it's not going to be achieving anything for you, even though you've got something like do such and such. And so, just a couple of examples: if we have an offering that's counted by two individuals that don't have recording or authorization duties very properly designed. Improperly designed control, an example, is someone's, the receipts are being counted by one person, but they've been super faithful to the ministry, and we trust them implicitly. Well, that looks good, and they very well may be very, very, very devoted and would never take a dime, but the control is not designed. That will not prevent a fraud from occurring. As far as monitoring, we have some notes here. The key thing on this I'm going to talk briefly about is just stating that the last point, that it should be ongoing. It should be regular. This is not a one-time thing. So if you need to, put it on your calendar, even on a quarterly reminder on your calendar to get out and do some particular review of a process and verify that the controls you have in place are working. We have a lot of best practices, and this is what we're going to not spend a whole lot of time on, but the goal is just to have something for you to refer to. Cash receipts, we really recommend the tamper-resistant bags, self-sealing bags. If you are counting cash and need to move that cash, say, from account room to another location, really recommend using those self-sealing tamper-resistant bags. Also talk about the donor system and maybe reconciling that to your general ledger on more than an annual basis. I typically recommend doing it at least quarterly. It's a good way of just making sure everything is working properly. On cash disbursements, one thing I'm going to say here is that's not on the list is we really encourage you to take a look at the internal controls related to your online banking. We've seen many organizations where they've got really good cash disbursement controls, But we dug a little deeper into their online banking and found out that without really realizing it, they had given people the ability to transfer funds outside to different accounts. They had given them ability to do like ACH, and they didn't even realize those folks had that ability. So really encourage you to look at tightening controls on online banking, as well as best practice of on your corporate credit cards of making sure you have an acceptable use policy and making sure that those purchases on corporate cards are being reviewed, that there's being adequate documentation, and that's happening on a regular basis. And finally, with payroll, just a couple of points to highlight on this slide. Probably the best practice is always recommend that your board review and approve the CEO or senior pastor or senior leader's position, the compensation and benefit package for that person. And we always recommend you take some time and try to get some comparable data for that. Also, a real key point here is just spend some time with the fringe benefits. We've seen examples where ministries have not really taken a look at some of the fringe benefits and whether those are non-taxable or taxable fringes, if it's spousal travel or perhaps use of an automobile. Those things need to be scrutinized pretty carefully. But I'm hoping that you have some tools here to refer back to as you're looking for best practices within your organization. And with that, I will turn it back over to Tim.
Thanks, Jeff, for giving some real practical examples of some internal controls and talking about kind of how a ministry can begin the process of improving their control environment. I think so much information, it's easy to feel overwhelmed. Quite frankly, when you look at the COSO report, it's very easy to fall asleep attempting to read it because it is somewhat dry material talking about controls and documenting controls and all of that. We've got some real practical things here, trying to, get you focused on taking care of just a few critical steps so that you feel like you're making some progress. One of the key things is that, again, to reiterate, tone at the top. That basically sets the tone for the organization. Is the executive team communicating proper ethical tone and codes of conduct to staff? And is that reiterated on a regular basis? According to the Treadway Commission report that was issued a number of years ago, tone at the top was the most important factor from an internal control perspective. Second step, cash receipts. Come up with some simple things that you can do. Have dual control on all incoming receipts. Have two people open the mail. These are the things your auditors talk with you about. Count the deposit together, sign the deposit log together. Use those tamper-evident bags if you have one person that is taking funds to the bank on their own. On the cash disbursements, make sure you're locking up your blank stock, check stock. Make sure that someone is reviewing the bank statement and even the bank reconciliation once it's been prepared. On payroll, take a look at the approval process. As Jeff said, probably need to approve the entire package. For those of you that are churches that have pastoral housing allowances, if your board has not authorized an individual to approve housing allowances, the board should be approving those on an annual basis before the first payment of housing is made. And I personally recommend that organizations kind of have a standing approval that basically says Joe Smith, who's the executive pastor, is authorized to approve housing allowances for new hires until the board meets next time or something like that, so that there is a de facto approval process. Risk assessment, step 5, consider having a risk assessment done, whether that's done internally or by an outsider. And then, you can, step 6, as Jeff mentioned his project recently with the church, they chose to bring in a professional to help them with the documentation. With that, we are at the end of our formal content, but we would definitely welcome your questions. I don't recall whether anyone mentioned that, but we would love to have, for the next 10 minutes, 15 minutes or so, give you the opportunity to ask some questions.
Well, this is Harold. Thank you very much, Tim and Jeff, for your time. We do have the time to have some questions, so if you can write some questions, that would be fantastic. I will start off with one question, and I'll direct it to Jeff. Is there such thing as a church that would be too small to have good controls?
Thanks, Harold. I think that every small church, struggles with that very question: how can we get good controls? And I think it requires some creativity. It may require really looking at your congregation, asking for some help. Do we have anybody that has some experience with either banking or financial related who might be willing to come in and do a quarterly review of some of the work that the bookkeeper has done, just to have something in place, even if you're very, very small, to enlist the help of others to try to create those controls. I think it's just so critical.
Okay. Well, we have another question here. If you're recognizing that theft may be happening from a staff member, but fluctuations aren't a guarantee or proof, what is the next step? They've taken steps to lessen the possibility of occurrence with changing internal controls over the past year, but the staff member still has access to small amounts of cash on a daily basis. And as support of finance counsel, it hasn't allowed us to change all of the cash handling policies. Tim, I'll leave this. This is a good question for you.
I think if there is significant concern over the fact that someone does have access to cash, what I would likely try to do is just from a management perspective say, okay, this is what our practice is going to be. All mail is going to be opened here in this spot, and it's going to be logged by 2 people. And then you might even consider having a video camera in that particular area if there's concern about something happening with that cash. Obviously, using a lockbox or a drop safe would be a possibility of reducing access, especially if you have concern over a particular person having access. Just don't give them the access code to the safe. Count it, you log it, you put it in the safe, and then what I've seen another church do is that then 2 members of the counting team on Sunday, before they take the first offering, they go get funds out of the drop safe, and they do a special deposit for the cash that had come in throughout the week.
All right. I will take this next question myself. And the question is, if you have a life insurance policy donation, should the cash value be booked annually? And if you are on the GAAP basis of accounting, I would say absolutely yes, that the cash value of life insurance policy should be recorded. And I think that the reason is, as it relates to the internal controls, is general ledger control is important to keeping track of your assets. So, if it was never recorded, it could just as well disappear and never be detected. So general ledger control of your assets is very important. So, and it does comply with generally accepted accounting principles to have that cash booked on as an asset. A second question. Jeff, I'll direct this with you. Are there any compensating controls for a small church whose treasurer has the QuickBooks at home and must reconcile the bank statement in order to do timely reports.
Yeah, Harold, I think in that situation, I can think of a couple of different things. It sounds like what's happening is that in order to get reports turned around quickly, the bookkeeper is going to maybe download the information online and then do a quick reconciliation and get reports out. I think that having someone else in the church, maybe with online access, could do a review of the activity actually online in the bank. I think that also you could look at having those bank statements actually forwarded to somebody else in the church. That's a real good way of having someone independently receiving a bank statement. I know getting bank statements is a lot less now that we're in the age of online, but I think the other thing would be is to follow up maybe after the reports are sent out to the elder board or whatever the governing committee is in your organization, and have someone come in and just review those bank reconciliations. It's just a real simple double check, and you have to have somebody who obviously knows what they're doing, but it's just a nice way of double checking and asking questions about that bank reconciliation, even though it had to be performed, right away to get financials done.
Sure, and one of the things that's not mentioned in the question, but I can kind of assume that it might be the case, that the treasurer is also a check signer, and check signers should not be doing the accounting and reconciling bank statements. That would be a key control to segregate. So maybe the head pastor, maybe the board chair of the board could be a check signer. But if the treasurer is doing the accounting, they should not be a check signer. Whoever is doing the accounting should not be a check signer. So another question here. Please explain why it would be important to document how a tamper-evident bag is used in a church. Well, let me. The most common way that a tamper-evident bag is used, and why it would be important is that a tamper-evident bag is most often used by the ushers. So the ushers collect the plate and they put it into a tamper-evident bag. And that tamper-evident bag, you can put it in a safe, and then the count team can pick up that tamper-evident bag the next morning. What a tamper-evident bag does is it makes it absolutely obvious, it's a good detective control, that nobody has gotten access to that cash from the point that the usher had it until the count team has it and opens the bag, where there are multiple people involved in the room, so your count team is there. Without the tamper-evident bag, it is very, very difficult to have a good system of internal controls that guarantees who has access to the safe, who has combinations to the safe, who picks the money up from the safe, and is there any way whatsoever that someone would have access to that cash in that intervening time period. I was just out to a church and we walked through the process, and they don't have the best controls over their safe. They actually have two different safes that they use, but the fact that they use the tamper-evident bags kind of solves that issue. Obviously, as soon as they have someone break into the tamper-evident bag, they got some other issues, but it makes it obvious that someone's tampered with it. It's a good preventive and a detective control in that case. So that's how I often see tamper-evident bags being used. It is
Harold, yeah. I totally agree with that. And the other thing that I would add that I've seen with churches is that there's a little tear-off piece that they can document how many tamper-evident bags they put the entire offering in, because it may not all fit in one bag. And if they keep track of those little tear-off slips, it's very clear that there's no way possible that just one whole bag could be taken out of the safe, and you might never know. But if you had a record of those little tear-off things, you'd know, okay, we had 4 bags that were put into the safe, and so we know we should be taking out 4 bags at the time of counting.
Right. Yeah, without those tabs, you really can't control. So that is actually necessary to have tamper-evident bags work. And most churches that I see will actually have one bag per service, and they'll enter the service into the donor database so they can track over time which services are collecting which, and they might not even necessarily have the same count team for each service, but it's a good way to track your collections. Another question here. What are some reasons why an auditor would not review financial documents after committing to do so after he had received the documents? Well, I'm an auditor. That's hard to say exactly why. I think that a lot of time document requests, particularly at the beginning of an audit, are somewhat generic. There may be other documents that will get you the audit evidence that's needed. It's pretty hard to know exactly what documents weren't looked at and if alternative evidence was gained, or for that matter, they may have requested, for example, maybe detailed support for a good example might be prepaid expenses, but when they finally are going through the audit field work, maybe prepaid expenses are so small that they decide that they're not going to test prepaid expenses. So it's pretty hard to know exactly why that would be. Tamper-evident bags, another question on that. Do you use tamper-evident bags for checks as well? Absolutely. So there's no difference between cash and checks. So anybody can take a check and get it deposited. Banks cannot and do not verify who's deposited what check from a donor. So by and large, cash and checks are the same. You do have additional controls for checks because you can track them into your donor database, but donor databases can also be manipulated by people. So I would absolutely say cash and checks should be treated absolutely the same as far as the collections go. Another question, are there any tamper-evident bags that are made of recyclable plastic? Tim, are you aware of any?
I am not. I think that there are several sources. I know some banks provide them as a customer service, but I know that there are. You can also order them from a Staples or an Office Depot. I have not gone out and purchased any lately to know whether, and I haven't searched for recyclable bags. But that's for churches that are environmentally conscious to that level. I applaud you. I'm not familiar with that.
And they certainly may have that recyclable. It's not a label, but that symbol that tells you what type of plastic. And I don't know. It's a good question. It's outside of my area of expertise. It's even possible, I suppose, that tamper-evident bags could be made of biodegradable plastic, but just so they don't get wet, I guess. I'm not sure on that one. That is actually it for our questions for today. It is 3 o'clock. We've gotten you out on time. So we have our quarterly webinar series, so we're going to kick the next year off. Our next webinar is scheduled for March 26th, so stay tuned for details on that. And again, give us your feedback on topics that you'd like to hear from us. I think that's all we got. And thank you so much for joining us for this webinar.